Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
Bye.
Good afternoon and welcome to my podcast. Hi, I'm Phil Grande, philsgang.com. Today, we're going to take a look at how Wall Street screws you and you don't know it, okay? What people don't understand, I've been doing this since 1988. And what traders don't understand, the retail customer doesn't understand, Wall Street is not on your side. And I have proof. I'm going to give you that proof. Wall Street doesn't work for you. Not at all. So there's 65, I always tell this to my members, there's 65 million traders. And there's got to be a reason that each day, 85% of them lose money, even if they're trading with a broker. Now, one of the biggest things is they want you to fail. Wall Street wants you to fail. That's what they hope. And the reason is because of margin debt. That's right. We've all heard of margin debt. Margin debt can spark, okay, a crash, okay, and they have. Now, let's take 2008. The margin debt was $351 billion in 2008. Now, the market dropped 57%, wiping out 80 to 100% of the retail traders' equity. So, $381 billion they have in margins, and the market dropped 57%, and you got wiped out 80 to 100% of retail traders got wiped out, their equity. Now, 2020, instead of at $351 billion, is now at $550 billion. That's right. So again, this is your margin debt, $550 billion. So the market dropped then 34%, wiping out 80 to 100% of retail traders' equity. Now, the traders, retail, lost between $440 billion and $550 billion in 2020. Now, let's take 2026. In 2026, our margin debt went from about $550 billion to now $1.5 trillion. So let's take that same drop of 34% that happened in 2020, where you lost between $440 billion and $500 billion. That's with a market that dropped 34%. So let's take now, margin debt's $1.5 trillion. Let's just calculate the same drop of 34%. Now, you're going to get wiped out the same 80 to 100% as you did in 2008, as you did in 2020, and you're going to lose again 80 to 100% of your equity. But here's the loss. On that same 34% that you lost in 2020 and $550 billion, remember, you lost around, let's say, $500 billion. That same 30% drop today, if that happens now, today, that same 30% is going to wipe you out the same, 80 to 100% of your equity. But your loss on that same 34% is going to go from about $500 billion to $1.3 trillion. So the question would be, why on earth Wall Street, remember, it's looking out for your interests. We can see that every morning with Becky on CNBC and I can't think of the guy on Fox, I never can remember his name, Payne. They're all there to help you. Oh, really? So if that was the case, why does Wall Street keep offering margin debt when the retail trader is getting wiped out? Because margin debt, okay, wipes out retail traders. That's why Wall Street loves it. Their job is to wipe you out. You are a pain in their ass. So that's their job, to wipe you out. And how do they do that? Margin, that's one of the biggest ones. Now think about it. You got to say, well, if they're losing so much money, well, wait a minute, they don't lose money. Margin loans are guaranteed for them. They can't lose. It's one of their best products. The return's about 12% interest. There's nobody on Wall Street gets a guarantee of 12% with zero risk. Are you kidding? You think they're going to shut down margin debt leverage when they're making a guaranteed 12%? And the reason they can't lose is because they've got your stock for security. What a game. And they keep this up hoping you will lose to keep wiping you out. They're betting you will lose. They make a ton of money. Now there's more proof that Wall Street is not on your side. Now, one of the proofs I always give my members is that Wall Street, as we know, they have an army of 65 million people, traders that don't know how to trade. They don't know anything. We call them tourist traders. They don't want to learn. Every morning they turn on TV and have their little pad and write down whatever Kramer says for a stock or somebody else says for a stock, and they run and they buy it. Now, but here's the brutal truth, how they don't want you to make money. Do you know when you place an order, your broker makes money the moment you trade, not when you profit. They get paid when you buy. They get paid when you sell, when you panic, when you get stopped out. The biggest thing, they get paid when you lose. So, what is this called? Payment for order flow. Now, you think when you place an order, everybody thinks when they place their order, that broker of yours is going to get the best fill. No! When you click buying 200 shares of Apple, you think your broker, good guy, your order goes straight to the stock market, and he's going to get you a great fill. He's going to shop it around. No! Because your broker's not working for you, it's working for Wall Street. So your broker sells your order to gangsters. They're called high-frequency trading firms. Like Citadel is the best-known name. There's about 6 of them. So you click that button, buy 200 shares of Apple, you think your broker's out there getting you the best fill. No. They're getting you the worst fill because they just sold your order. So the firm that they sold the order to, let's say Citadel, pays your broker for your order. You haven't even got a trade done yet. Nothing's traded. They got paid. It's called payment for order flow. Now, how your broker makes money, they get paid every time you trade. Now think about that. They earn more when you trade more. They earn more when you trade popular stocks. That's why they always tell you to be in this stock and that stock, and they create a story to be in the most popular stocks. Because they earn more when you buy Apple, rather than Joe Suckface restaurant company. So example, your broker, as an example, makes money when you lose. He still makes money. I thought he was your buddy. You know, he's the one that said, hey, if you like the stock at 80, I got more of it for you at 70 or 60. We'll cost average it down. I thought he was your buddy. So let's say you place a buy order on Apple for $200, okay? or 200, buy 200 shares of Apple. Now you think you're buying Apple. Your broker's routing that order through the market to get your best price. No. Here's what actually happens. Your broker immediately sets your order, sends it out to Citadel. Citadel pays your broker for your order. Thank you. You haven't even made any money yet. The broker profits even before you trade, before it's filled. They get paid just because you traded. They get paid even if you lose money. They get paid even if the stock market goes down. Your broker's already in the green. What are you, nuts? So Citadel sees your order before the market. This is the one I love. They see your order before the market does. They know you're buying and you want 200 shares and you want them now at a certain price. This gives them an opportunity to front run your order. What an advantage that is. So Citadel buys shares themselves milliseconds before you get filled. So let's say Apple is trading at 210. Citadel will buy it 200 shares at 210, right? Now, they'll front run your order. So then they sell those shares to you at 210.3 cents. So Citadel profits 200 shares, okay, made $6. And they do this millions of times. So they know what you are buying. They know you order 200 shares, what price you want. They jump in front of you. And they buy first. Wall Street's not there to help you. And the sooner you understand that, you'll learn how to trade properly. And you stop listening to these TV jibber jabbers, all the noise makers every morning, who Wall Street, who the 6 biggest brokerage houses, the 6 biggest institutions every morning make a decision where they're going to put their money. Every morning. And it may not be where you're going. They don't care. So Citadel will profit that 200 shares, okay, and make $6, and then it's risk-free for them. It's instant profit. It's guaranteed profit, and they make that $6 profit 5 million times a day. So count 5 million times $6. You think that's any big money? Huh! What are you, nuts? And they always make sure you get filled at the worst price because they jump in front of you. You think you bought at $210. But your fill was at $210.3 or $210.80. You lost $6 instantly before the trade even starts. What are you, nuts? You don't see it. It's invisible, but it's real. So if Apple drops, you lose. The broker wins. Let's say Apple falls from 10.03 to 2.05. You lost. Your broker wins. He always wins. Wall Street always wins. If you panic and sell, they get paid again. So again, you never win. So the idea of trading, until you understand how to trade, you'll keep getting screwed. And someone's got to wake up some morning and say, wait a minute, I don't get this. Kramer's not my friend. Payne's not my friend. Becky on CNBC's not my friend. They don't work for me. They're my enemy. They're taking money out of my pocket with a rigged system. But if you know how the market works, you can make a lot of money. But you got to know how it works. And the most important thing, you've got to know how not just to buy a stock, but sell a stock short. And that's why they put the fear of God in you, to make sure you never short. Because then they start losing money. As long as you don't short, as long as you cost average down, as long as you buy on dips when there's no QE, you keep losing and they'll keep making. So there's the proof. Wall Street is not on your side. I mean, it's solid proof. And so again, please understand this and take this as an opportunity to learn how to trade. So your margin debt crisis we're in right now is huge. And they're glad for it to be a crisis because they want to screw the small retail trader. That's how they make money. Okay, so that's how it works. So once you learn how to sell properly and you're no longer a tourist trader and you're a serious trader, then you'll be turning the tables on them and you'll be making money constantly, unless you make stupid mistakes. We all do from time to time. But at least try. Right now, there's no way you can make money. Retail people never, at the end of the day, not one retail retail trader ever finished and said, I made money in the stock market. I don't care if it's 401k, you always give it back because they make sure you're going to give it back. All the time. Okay, I hope you enjoyed this. Okay, maybe it's a little harsh, but it's the truth. So again, these margin debts, stay away from them. They want you to buy on margin because they can screw you good. I'll see you on the charts.
Are you nuts?